I'm Hannah Moore, CFP, a practicing financial planner and educator. I'm on a mission to change the way people think and talk about money. Let's get started. Hey everyone, I want to share with you guys a question or a comment that I hear often from newer investors or younger investors of how can we trust the stock market? I've had family members who have seen, they've lost 30% of their retirement and all these different pieces. And I want to share with you kind of some thoughts on that. But first, I have to tell you about an email that I literally got right before I hit record on this. And it was a client telling me that she is now retired. She's been working for this for so many years in her life. We've worked together with her financial plan, and she did it. Like, she's retired as of today. It is seriously, there are moments where I just pinch myself and I'm like, do I really, is this really my job? Do I really get to help people help achieve these massive milestones? Now, certainly she is the one who's doing the work on this, but being able to see her pathway of, working with how she's investing, working with all the struggles that come along with this, and then to actually get to this point where she's able to retire. It is seriously one of the best parts of my job. And I am so incredibly proud and excited for her. Now, this definitely ties into this larger question that I was going to start with this podcast with of how do we trust the stock market? And I will tell you from seeing this woman's from seeing her family's finances, that this wouldn't have been possible without investing in the stock market. And that's a big thing to kind of know, right? And I'll tell you, with this client in particular, she had some really bad experiences with investing, really, really bad. And she was asking these exact same questions, but she stuck it out and she was rewarded for that financially on that side of it. So let me kind of walk through kind of how I think about this comment of, my parents lost 30% of their retirement in the stock market. Now, number one, this could very well be true. And that it's incredibly painful. I hear that and it's just like a punch in the gut, if you will. So I say that, and then I have a couple asterisks that I place on this. I don't want to have a yeah, but kind of come back to it, but there's a couple questions that I have for that. So number one is it still down 30%? And it might be, I don't know, right? So I always want to leave into these possibilities. One of the things I've realized very quickly early on in my career is that we're all operating on incomplete information. We all are, right? Including me. And so when I hear these things with people's financial situations, I always wonder what else is in that story of why did that happen? We are coming off of a time when, we're in 2023 now. We're coming off a year of 2022 where the market was down. It was a hard investment year, hard investing year. We can look at the S&P 500, which is the largest 500 companies in the United States. At their total, that was down 19.5%. That's a lot, right? If you had $100,000, now you're down to 80,000. That's significant, right? We have to recognize that's a big deal. That's what the S&P was down. We look at individual stocks, and individual stocks are going to range. We're going to have some stocks that were up this year. There's certainly examples of that. We're also going to have stocks that were down tremendously. We look at Tesla. Tesla has been on this rocket ship, if you will, of explosive growth for the past several years. But this year, it was down by 65%. So if you had $100,000 invested in Tesla, you now have $35,000 invested in Tesla. If you stayed from January 1 to the end of this year, invested in Tesla. Well, down 65%, that's huge, right? I have had clients who came in with large Tesla positions, right? And it becomes this question of, okay, how are we going to manage this? How are we going to look what are we going to do with these positions? But when we come to investing is not all the same, right? Investing all of your money into a Tesla can be very dangerous. Where you can lose that 65% of your value in 1 year. Now, you've also seen it grow tremendously over the past several years, depending on when you put that money in. But it's very difficult to kind of get those point-to-point comparisons. So whenever anybody tells me, my portfolio was down by this much. It's always, okay, what are the timeframes? Because that matters a lot in this. What are the timeframes? What did the benchmark do? Did you stay invested that whole time? How are you invested? Are you picking stocks within that account, or are you invested in the whole of the economy, if you are a whole of the stock market, or index funds, or kind of what is your approach? Because there's going to be different ways that mean different things. So when I hear this comment of, okay, I've seen family members lose 30%. I want to know what was in it. Like what caused that, right? And not in a like, well, this can just explain it away and make it all better, because nothing makes that better. But really getting in there to understand, like, okay, what is your strategy? Do you have a strategy where your investments could lose 30%? And if they do lose 30%, what do you do? So much of financial planning, when I look at this, financial planning is about building this picture almost of your financial life, and making sure that everything is kind of like in sync, and there's this harmony in it, and it just works together really, really well. You have your foundational pieces built. You have all these things. When we get to the part of investing with my clients, we talk about, okay, what is going to happen when the market goes down? What is realistically going to happen? Like, is it possible for your portfolio to go down 30%? And for both, and the answer can be yes, depending on the portfolio, depending on different factors. And then we ask the question, okay, if that happens, what are we going to do about it? What's our game plan if that's going to happen? Are we going to stay invested? Are we going to change our strategy? Are we going to shift different things? How are we going to approach that? We build out a plan for what happens when that market falls. Now, we look at this, in the context of your financial plan. One of the things I'm very passionate about is you shouldn't be investing unless you have an emergency fund. You shouldn't be investing, unless you have some of these protections, because imagine if your whole net worth was tied into a Tesla stock this year and it fell 65% and you need money. Our HVAC system, our heater went out literally this week to where, like, I thought my house potentially was on fire. It wasn't. We're all good. And thank God it didn't happen, but we just had a big freeze here in Texas. So we came out good on everything, but we had to get that replaced. And that was a big ticket. It was just a 5-figure expense for us. And if we had all of our money, all of our savings, everything that we had access to invested in a stock that's down 65%, that obviously creates problems. And so you have to make sure that you have your financial house in order before you get to the point of investing. And then when you get into the investing side, you have to look at, okay, what's gonna be a recourse? What are we gonna do if our investment portfolio falls 30%? What is our plan, right? Because here's the thing, it all comes down to managing risk, right? I can build a portfolio it's going to have very low downside risk, is what we call it. It's going to have very low, it's not going to go down, but it's not going to go up very much either. And so it's making sure that you understand kind of what's at play with that, right? Like what are the ups and downs that go with that account. Going back to my client now, who just retired today. Like, how cool is that? Okay. She was, when we look at her investments, she's going to have investments that are going to be down. The S&P 500 is down 19.5%. She's going to have investments that are down, kind of tracking that. She's also going to have investments that aren't down. And as we look out for, with all of my clients, as they approach retirement, we're mapping out an income plan for them of saying, okay, what happens if the market falls? If the market falls, where are we going to be getting your income? Because we don't want to be pulling it from stuff that's down 20%. We want that stuff to recover and get back up to where it needs to be. But what are we going to be doing with, where are we going to be pulling money from, especially if the market's down in a down year when you retire? And what makes me so happy for this client is that she let her life dictate when she wanted to retire, not her investments. And so she, in her email, even mentioned oh yeah, we need to do something with this 401k. I looked at it and it's down, but I'm retired. It's one of the biggest things for me is when clients retire, when the market's down, because we've made a plan for what that looks like, right? It's a big, big piece. So the other piece that comes with this, so I'm talking about kind of on the end, not the end. Retirement is not the end of a life or a financial plan by any stretch. End of the working years, but going towards the beginning of your working years when you're saving, you're investing. If you hear the market is down by 19.5%, it's a good time to be investing. That's always, it's going to be, it's just a good time to be investing money. It can be scary. I'll tell you, I've had thoughts of like, oh my gosh, is it going to go down even more? I don't know, right? I'm not in the fortune telling business. I don't know what's going to happen because we just know that these things can be unpredictable. But there are things that we know. We know at the end of the day that we're investing in companies. We're not investing in government policies. We're not investing in, international politics, anything like that. We're investing in companies that are going to be making money. We're investing in the humans that are running these companies, that are working in these companies, that there's going to be this ingenuity, right? Like that gets me excited. And I'm like, okay, yes, that's something that I don't know if it's going to be Tesla. I don't know if it's going to be Microsoft. I don't know who it's going to be, but I know that these companies are going to figure it out. And that's what I'm investing in. So when I look at this from a person who's still in the working years, now's a great time to be investing. And now's a great time to be taking advantage of those 20% and 30% declines in the market. So circling all of this back and pulling it together, hearing these things of, I've seen people lose money in the stock market. Yes, it absolutely happens. And I have a lot of opinions, especially about financial advisors who put their clients in bad investments that let that happen. That being said, when I hear that, number one, I want to sympathize with that. So I don't want to minimize that at all. But second of all, I want to, just stress that yes, with the stock market, there comes risks and rewards, but it's really important to understand what those risks are and understand kind of what that looks like for you going forward. And in that, what it looks like going up and down, there's just a lot of potential as well. And the best way to kind of manage some of that risk is to have the financial plan in place of making sure that you know where your money's going to be coming from in case you need your investments. And then also making sure that you have just a solid investment plan, right? Going in and buying just random stocks, it may work out, but that's not what I would call a solid investment plan. And so it's all about kind of putting thought behind it, making sure that you're not just in one stock, that you're in a lot of different stocks, that you are maximizing, the possibility of what can be available to you. Because the more that you do that, the more that you are going to get better returns. You're going to be getting sustainable things where you're not going to be losing 50% of your portfolio and just be, just out that money, but knowing that you have a plan for how to recover from that. So I hope that's helpful. And just remember that as you're approaching these things, there's always more information. And number two, you can do a lot to help make sure that you're not in that, in that situation, or make sure that you're really well informed of what is it that you're investing in. Ask the questions about your investing. And you can go high level to a million miles deep. There's so much information, technical information out there on the investing side of things. And three, the stock market and investing is absolutely worth it. It is 100%. It is a vehicle that so many Americans have been able to retire on and has created so much wealth. And it is definitely something that you don't want to be sleeping on, that you want to get informed and educated on, because it can make such a difference to your financial picture, especially the sooner that you can do that, especially when the stock market's down and things are down. It can be a great time to learn and jump in. And don't be intimidated by that. Go listen to some of the past podcasts on this. It can be, I talk to so many people and I'm like, okay, let me tell you this. If you can have 3 kids, or you can have 1 kid and manage that, you can understand enough about the stock market to make really, really informed decisions. I promise you that. So good luck on all of this as you guys continue on, and congratulations to my client, right? How cool is that? Anyway, we'll talk with you guys again soon. Bye, y'all. Thanks for listening to this episode of Everyday Money with Hannah Moore. If you like what you heard, subscribe and check out livewealthynow.com. We have a lot more resources to help you live wealthy now.